I'm Bernard, and STR, let me introduce, I think a lot of friends here may not have known STR yet. So we are a data analytics company that is based in US. Today we have this amount of data on the platform, 8.9 million rooms on the count. That means all the chain that you can think of, from your Marriott's, IHG, whoever, Hyatt, Hilton, they all submit the data to us. So when we collect the data, why are they giving us the data? Basically, they want some benchmarking. They want to know what's the performance in the market, and thus we give them a report. So today we cover 180 countries around the world. We are the only guy that does this. So you're going to be in for a treat with a lot of development and pipeline numbers in this region, Southeast Asia. So let's have a look. A bit about myself, which our hosts have already introduced. But in case you see me and you see that I'm familiar, it's probably because of this other guy. Right? Yeah. So he has a lot more zeros. I have more lines, I guess. Yeah. So let's kick off. Asia Pacific, if you see, so I'll go a little slower for the benefit of the different audience here. Normally we speak in hospitality, but today is real estate, which is still relevant because it's hospitality real estate. When you see supply, it means the number of rooms that is coming in, that is available in the market. When you see demand, it means that the number of rooms that is being sold. So a hotel like this, Grand Mercure, would have, say, maybe 300 rooms. If they have sold 200, then you get the occupancy level. So the numbers you see on top, that percentage is the growth against last year, which means you see 2019, 1.8% growth in demand. It's still growing, but it's slower than the growth in supply. And that would mean then that the occupancy would be lower. Now look at Southeast Asia. 2018 has a higher growth, 3.8. 2019 is a very different story. In Asia Pacific, the demand has come off less than 0.5%. Have grown by less than 0.5%. What does that mean? So in hospitality industry, we use RevPAR, which is the revenue per available room, which is the true performance of a hotel. It means that if this hotel has 300 rooms, it's the capacity that they can sell. But then you look at the total room revenue against the total capacity. That's the revenue per available room, not just the room sold. Yeah. So across Southeast Asia countries, those above the line tells you that the RevPAR has gone up. That means the performance of the country has gone up in terms of hotel. Those below the line, like Philippines, almost borderline. Vietnam, Maldives, Malaysia, South Korea is below that. Sure, hands first. Anyone from hospitality industry? Well, quite a few. So I'm speaking your language. Yeah, so I go a little faster then. Right, so then this year, what has happened? You see the same order, but they have shifted. The shift is on your left-hand side. Some of these countries have come off in terms of performance, in RevPAR performance. Those on the right, Philippines, Maldives, South Korea, actually have gone up. I think some of you are from India. So you see that India has gone up by about 2%. And Hong Kong, you know the story, right? RevPAR is affected naturally. So I have selected some countries to share with you. Thailand is one of them, obviously. Singapore, Malaysia, and so on. We'll go on. In this part of the world, the most important and the biggest, in fact, in the world, I think, the most important market source is quite obviously China. And will China continue to dominate in terms of source market into Asia Pacific? We shall find out. Here are the top 10 source market into Southeast Asia. You see China. Oh, okay. So we didn't test this. And basically, China has a 16% increase. So I still remember the numbers because I did the same presentation yesterday. China has 16% increase in terms of coming into this part of the world. There is still, but across, you see that these 10 nations are the nations that come into, there's a lot of interplay here. So like Malaysia, like Thailand and Singapore, there's inter-travel within the region. And then for outbound in Asia Pacific, here you see Cambodia, Philippines, South Korea. Those highlighted in yellow. I apologize for the slides. We should have tested this, but those are the numbers. Those are the guys that have very strong increases, 2-digit increases. Cambodia alone, you see that number, 2 million arrival from China. This is the Chinese outbound into here. 2 million out of 6 million total arrivals. That's 1/3 is Chinese. What does that tell you? It tells you that there's a very high dependence on Chinese arrival in Cambodia, right? Same for Philippines, similar to South Korea and Japan. So why is Korea getting the gain? Part of it is Hong Kong. Hong Kong situation today has somewhat benefited some other countries. Korea is one of the direct benefit. Singapore, not as much, but Korea has quite a bit of that. Japan is still obviously popular. This year, is rugby. Next year is Summer Olympics. And so there will be quite a bit of Chinese going there. Cambodia, as I explained earlier, and Philippines, as a Chinese myself, although Singaporean, I can say this, anywhere that there is Chinese, there will be gaming. True? Yeah. Because you're a risk taker. But of course, there's a lot of investment going in from China into these two countries, Philippines and Cambodia. The BRI has an effect. And of course, in Thailand, it has come off. So Thailand is a negative figure today of 3.3%. So that figure is 3.3% there of a negative figure. So it is still big, but it has a negative growth. Now, let's look at these ranges of top 10 arrivals into Southeast Asia. Obviously, China is very big, right? And then you see the darker lines are your this year, and the lighter one is last year. So beyond China, if the country is totally dependent on Chinese, what other areas can they depend on? They can look at India, which highlighted these three. These are the double-digit growth, both 11%. All three are 11%. So from South Korea, Malaysia, and India, 11% growth against last year, same period. Which means if you're a hotel here, you have always been, sending your troops to China to get the sales call, or you are working with C-Trip, and you find that, hey, we are overly dependent on one source market. These are the other three source markets they can focus on because they're growing and they're coming into this region. South Korea, Malaysia, India. I'll show you this. Anyone have a clue where this is? Sweden. Looks like it, isn't it? China. This is Zhejiang, Alibaba's headquarters. And so there is a lot of development out there in China. The modernization, digitization, automation, whatever you can think of is there. And so domestic growth in terms of travel is very large. How large is it? It is 11% of the GDP. And of course, 5.5 billion tourists internally. And that's bigger than any of our countries here in terms of population, right? This is domestic travel. That's how big it is. And so with today, the China and US trade war, Chinese too find that it is getting a little tougher to come into this area. Like Thailand, for example, Thailand's currency have gone up for your good benefit, right? It has, the Thai baht has gone up. One, because of trade war. Two, because Thailand is bullion country. So the investors then look at, if the war is going that way, I better secure my assets in investing in gold. And thus Thailand's reserve is very high, 220 billion. And so you have a good reserve, then your currency will go up. But again, if for a Chinese, then even for a Singaporean, coming here becomes more costly. So they stay internally. While that is big, So on hotel front, what is also big? Brands are big. You will see here on your left, North America has very high percentage of brand representation. So again, the big names that you can name off Accor, Marriott, Hilton, Hyatt, they are all contributing to that number, 65% of that 10 years ago. Look at Asia Pacific, 43% only are brands 10 years ago. And non-brand, which we call independent property, is 57. So 10 years later, what happens? 10 years later, it has shifted. Look at Asia Pacific. So America is still big on brands, close to 70%. Asia Pacific, 50%, 53% in fact. So it has shifted. And that signals the confidence that the brands have in this part of the world. This is the number of room in terms of branded properties in Asia Pacific. So we look at Southeast Asia. Here across Asia Pacific, the big circles that you see, above 50% are in countries like India, China, Japan, New Zealand, and even Singapore. So apart from all that, Southeast Asia has very little representation in terms of brands. And if you're an operator or if you are a developer, you will know that then the way to go, the fast pace to go is franchise instead of manage. And so compared Asia Pacific to North America, there's still that potential for Asia Pacific to look at franchise and for brands to grow very quickly. Now, of course, then throughout what we have in Asia Pacific, we in STR do not look at star rating, which is what you're quite familiar with. The reason is star rating is quite arbitrary. It can be, I'm an OTA, I can go there and say, oh, you're 3-star, but the GM feels that he's 5. So what STR does is we look at the average daily rate, the ADR of the market, and we then look at the hotels or their daily rates across 1 year and average it out and then put them into classes. The 6 classes from economy to luxury, and that is a consistent measurement of the class. And so that then we can do benchmarking. So mid-scale economy was a big thing then. Today, going forward, you will see upper upscale and upscale, which is your 3, 3.5, 4-star kind of property that will come in the future. So we collect pipeline. We are able to tell you exactly how many rooms, what type of property, where they're going to build, when are they going to be completed, and those data that STR carries. And then, so you see Japan, Vietnam, Indonesia, Thailand, these are the ones that will have very big pipeline coming into the country by 2020. Southeast Asia today have over 1 million rooms. Brands represent 30%. This number of rooms, 243, will be open by in the pipeline by the next 5 years. And that is 83% that are brands that will come in. So you see the confidence of brands coming into this market. And of that 243,000, 75,000 will be open by next year. A lot. So if you're a hotelier here, you should be thinking about what to do now. So we dig into some markets. Malaysia first. It's an interesting country. In 2017, 2016, 2017, you see that high growth there in demand. 2017 was SEA Games. So and also just before the era of Mahathir coming back into the scene, the growth was big because there was a lot of domestic travel in there. And thus, after that, it wasn't sustainable. It came off to 6.6%, and then this year, 0.9%, so less than 1% growth in terms of demand. But supply is still coming in. So when you have so much room coming in consistently at about 3% and no demand, then the effect is you see across all the scales of hotel, in terms of demand, upper mid-scale and mid-scale economy have dropped, while the demand in your left, luxury to upper upscale, has gone up, but the RevPAR has come off So that's the true performance, as I mentioned, true performance of hotel. Every single scale have come off. Then we look at the various markets, sub-markets in Malaysia. You see Selangor, 4% up in demand. Langkawi still commanding that demand. People still going there. However, when you look at rates, Selangor rates come off. So there's demand, but the rates are not, so probably rates are driving the demand. So they dump rates to drive demand. Langkawi still holding up there, but it's not a very good scene in Malaysia. If you're Malaysian, you see this as a hotelier. Oh, okay, we need to do something about it. Pipeline, the yellow dot shows you the pipeline that will come in. 36,000 more rooms will come in, and this is taken as of this month. So in the next 5 years, all these rooms will come on. Vietnam, supply continues to grow. A lot of interest going to Vietnam. 51,000 rooms that will come, but the demand have come off. It's not, possible reason. There was high growth 2 years back. Vietnam crossed the 10 million mark in terms of visitor arrival. Then they crossed 13 and then 15. But then the demand is not there anymore. Could be, we can explain this in certain way. In the past, I could be one person going there. So I bring my family. I'm still consuming one room, right? Later. Second reason could be Airbnb. We don't track. These are hotels. But there is a lot of changes in Vietnam in terms of demand and supply. So you see 51,000 rooms coming in across Vietnam, in Hanoi, in Da Nang, in Cam Ranh, Ho Chi Minh, Phu Quoc, Vung Tau. So when this happens, occupancy, you see that occupancy hasn't gone up in 2019. Rates-wise has also softened. Here across the various markets, Ho Chi Minh City come off because many people have stepped into Ho Chi Minh before. Now they use that as a hub to hop on to the other markets like Da Nang and Hanoi. So go back one, Da Nang, Hanoi, you see demand going up. So if you're a hotelier, you would raise rate, right? You know demand is coming in. However, the Da Nang rate has still a lot of opportunity. It's minus 16%. So if you're a Da Nang, if you have a property in Da Nang, you know what you should be doing. Singapore, that's where I come from. It's a bit of a strange behavior in the market, in hospitality, because supply was very big in 2016, 2017. We saw almost 8,000 rooms open during those times. And 2018 and 2019 is softened. So when supply comes off, demand usually will go up, occupancy will go up. This is the RevPAR, the performance. Right? And you see that the demand is the one that's pushing that performance, not the rate. Because when you see the rate against occupancy, the blue line shows you the occupancy. Singapore is a very compressed market. That means there's not much room to play. The occupancy is at 85%. And the rates is coming down. So Singaporeans out here, anyone? None? One? Yeah. It's tough to explain. Yeah. Thailand. While we are here, we should focus on Thailand. And we have Thailand demand coming off. Thailand is also still a very high growth market in terms of supply. Everybody wants to build a property in Bangkok. Don't know why. There are already hundreds of properties here, yet more supply will come in. If you want to put a property out there in Chiang Mai, you still put a property here first in Bangkok. And so supply continues to grow. Demand is coming off finally this year. And that pushes down the occupancy. And of course, then the rate come off a little bit. Across the scale, you see that there is literally no demand going into the scales of hotels. And that, in terms of translate that into RevPAR growth, you see across, again, all the scale, there is no growth. There's a negative growth. Sorry to have carried this message across to Thailand, but I think Thailand has always been able to show its resilience and rebound quite quickly. While this is happening, that there is still a lot of hope in there. Because when you see this If you are a property in Pattaya, you're still doing that pretty well, right? Supply is 1.4, demand is 2% growth. The rest of the market is not. And then again, of course, your Pattaya property, you see that 2019, the rates is the one that's driving the growth in demand. There is opportunity out there for your RevPAR to grow. So we zoom in into Bangkok. We have, you see, Bangkok is still, there's still a lot of rooms in Bangkok. As I shared with you, almost 93,000 rooms out there. And when you stack that together, you see that the number of rooms being filled, that top bar is the gap, which is about 30%. 30% of Bangkok is unfilled. So you're sitting about 77% in terms of occupancy. And that means there is, you're not optimizing it. And so across the rest of the market as well. I apologize for this. I will send it out to you or send it out to your organizer and have all this corrected for you so that you get the numbers. And then in terms of Bangkok supply and demand, you see, again, the chain scale. The earlier one was Thailand. This is Bangkok. Luxury class, upper upscale, all the classes, the RevPAR has come off. In terms of sub-markets, Sukhumvit, Bangkok Center is still in demand, right? Because we're all here. We have a role to play here. Yeah. Supply-wise, these are hotel clusters. Those dots there, I didn't show you the yellow dots, but they are clustered together. That's where the supply is going to go. The new pipeline is going to go. And that's where it's happening. So it has gone out of Bangkok, is going to the borders of Bangkok. Another 70% will be added into the stock of hotel. And of course, service apartment, I should not, since this is a development conference, let's cover a bit of service apartment. Service apartment in Manila, in Singapore, Jakarta, is quite big. It's something that developers want to get into. You see the growth, 11%, 10%, 8% across these three countries. But service apartment against hotel, in the same growth-wise, RevPAR growth, Metro Manila is the one that has still that good growth of 4%. Here, I'm going to show you last 3 slides. If you have a property on an island, should it be a beach property or should it be a non-beach property? And what's the effect? So we always stack these two together. Phuket, Bali. Here is Bali, occupancy last year. Here is Bali, occupancy for beach and non-beach. So it tells you that non-beach are the ones that people are going in today. The favor is non-beach in Bali. So like a Ubud, yeah. And the ADR, the average daily rate, beach hotel and non-beach hotel, that's the rates. So while if you operate a non-beach hotel and your rates is there, while you know that occupancy is up better than beach hotel, there's an opportunity for rates to grow. Let's look at Phuket, beach hotel and non-beach. And then let's look at the rates. There is the beach hotel. Non-beach is 1/3 of the rates commanded by beach hotel. So again, it signals there's an opportunity. Yeah. So I have to close this. In summary, China, again, there's still the demand coming in, although slowing down. There are other sources we touch on. South Korea, right? We touch on India. International brands, they are coming in. They're coming in quite big time. And of course, if you're an operator here, you know if you have various hotels around the region, there are different, Southeast Asia is 10 countries, and it's very fragmented. Different countries behave differently, so you might have to look at different strategy. So I open for questions. Yes, sir.
Well, you look at statistics always, of course, but like you touched upon Bali and Phuket at the end. and you say Bali, non-beach is going up, whereas Phuket, there's an opportunity. But Phuket's really a beach destination. Phuket doesn't have the culture that Bali offers, so it's really looking at it in a silo of statistics. So you have to look at various other factors as well, right? Not just percentages.
Yes, yes. I think it's a very fair statement to make. We do this comparison because there's always that question, should I, as a developer, should I tell my investors, my owners, where should they, what should I recommend them, or it's a feed study, where should I recommend them to do? So we do these studies because we wanted to clearly show by just numbers, just by data, which is always the story behind it, right? And then you see that the effect of between a non-beach and a beach property. We don't recommend, we don't say that, oh, because of so, then you should put there. But those data are basically there for a reason. Yeah. Any other questions? I'm around, so for this morning, and we'll send out this deck to you, and so that you have a copy of this. In case you need the deck very urgently, here's my email address. You can send an email to me. Thank you very much.